All right, so let's just go over the market today, see what opportunities presented themselves, etc., etc. All right, so first we'll look at yeah, at crude. So as you can see, first of all, let me just go over the. So if you want to trade the market, and you're wondering, in this all this complication. Um, all these complications with with all these online shit that they don't know what they're doing, and you're just looking for setups. There's only basically there are multiple categories, but there are two key categories. One is the trend reversal, and the other is trend continuation. All right, so these are the two key categories. If you trade this along with two markets, at least two markets, right, you're gonna get these trades, especially the trend continuation that happen a lot of times in the day. As long as the market has some range, and the markets do, you have crude and all, and the ES and other markets. As long as they have some range, you're gonna have a trend continuation. This is very frequent. These trades are frequent. Trend reversal is infrequent, and it's a little complicated. But trend continuation, this is what you want. Okay, so these are the two types, and in these two types, trend continuation is basically your breakout and pullback trades. Okay, trend reversal is your change of behavior trade, and if you know anything about change of behavior, it's basically a big wave at the bottom of a trend, a lot of volume, a good price action, low volume pullback, and it goes the other way. And also, this is what you use at levels. Higher time frame levels. Everyone's looking at like higher time frame levels. You get a lot of trend reversal trades. So when you trade levels, it's good. This type of trade is really good because that's what you see at the levels, at the higher time frame levels. The trend continuation, it could be within the higher time frame or lower time frame. So you get a lot of these, the trend continuation. Okay, now depending on what you're more experienced and comfortable with, you'll have to pick either breakout, pullback. I prefer the pullback trade. So these are the two types, and within these types, you have breakout, pullback. Now the subtypes, meaning there's a lot of different ways to do pullback trading. Everyone knows, right? So I'll just put you have some retracement, you have some reversion to mean, which is basically a moving average. You have the test of the breakout. Then there's the deeper one, which is test of the demand zone. And then you have like some type of VWAP strategy or POC strategy, and then you also have all those different candle pattern. And then of course there's also, let's not forget, I forgot, diversions. Yeah, oscillator diversions, right? Oscillator. So there's multiple. Okay, there's it doesn't stop. So you have to figure out what you're good at and get really good at it. If you're a pullback trader, that's what you do. Breakout traders are basically looking for price volume breaks at key levels, and if they're smart, they'll do it before the breakout of the ultimate high and know how to get in on the earlier lower time frame breakout after a pullback. So these are the two types: trend reversal, trend continuation, and then whichever ones you're really good at. There's more, but you have to just pick one that you're really, really good at. Like some folks, they will use trend line break. Others will look at their depth of market and look for reactive buying and all of that. So order flow techniques, right? But the bottom line is just as a pullback trading. You also have the break. I don't know how many there are, but what's it called? The pattern. So they look for A, B, C, and there's a lot of other patterns. So I don't want to get into this, but you have technical patterns, quote unquote. There's nothing technical about them, by the way. but the inverse head shoulder, or inverse head shoulder, or all this, all tech patterns. They're just patterns. All right, so it just keeps on going. So you just have to get really good at whatever it is that you're doing, and know how to get in the pullback. This type of trade, I really think, should be in the Wyckoff trader. You really need to have this in your arsenal. Really need to have this in your arsenal because there's so many of them. You're not going to be waiting all day for a turning point, which is what happens if you only have a trend reversal trade. It's you might have one, might have two, or you might just not be able to see. If you're trading one or two markets, this just having one trade in your toolkit is going to fuck you up. All right, so because the whole day you're going to waste time and just looking when you could have been trading on the way down and on the way up. Instead of waiting for the trend reversal, use the trend continuation trade. Now here's the good thing. The good thing is you could do day trading like this as well as swing trading like this, because these two setups are all you really need. Now, once you understand that trend reversal, trend continuation, you have to get really good at one of the trend continuation setups, so you can jump onto any trend. You can if you're trading a big cap, small cap, intraday, swing trade, you have something that you're good at, and then the risk parameters, etc. So one of the things I use is I'll go into this is just you have a base, right, a consolidation, and then you have a breakout. Simple pullback. You get in on the pullback, and where is this? Okay. And you just this is a typical trend training where you have consolidation rally or consolidation breakout, fall through, and then come back, pull back to test. And I'll know where to enter because of what the stuff I know and the stuff I use. I'll know where to enter, and then I can just get the next move. So this is one type, okay? It's basically a pullback. It's a break pullback or rally pullback, get in on the pullback and ride it. And then you have the change of behavior, this type of trade. This, you need to know this. All right, you need to know this so you don't get screwed. All right, now I'm done with that. Now let's see how many came today. So let's go to what do I do here? Like that. Never mind. All right. Sometimes I don't recall how I moved the charts, but here it is. Okay, so we're just going to take a look. Okay, so the middle is the tape reading chart. On the right hand side is the wave chart. On the leftmost column, the first column, those are higher time frames or higher box sizes. Higher PNF box sizes. In the middle, you have the what you use for execution, right? It's not rocket science. And I'm going to show you now the clarity that I have So here's what happened on the ES in the morning. Pay close attention. Market comes up immediately here. You have effort. I knew something's up. All right. Now here's the thing. The way I look for effort is I'm looking for effort in the ranges and lack of supply in the ranges. Now the key is the effort. You don't know which side is going to break. Okay, you just don't know which side is going to break. The effort could be absorption, effort in absorbing to go into the same direction, or it could be effort as in bag holding to go the other way. In other words, it could be accumulation or distribution. You don't know, and I have to look at the other chart to to figure it out. All right. So anyway, it goes up, 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 and then you have effort. Then it pulls back and it loses supply right here. Okay, so you have effort up here. I don't know if that's effort to go higher in terms of are they absorbing the high and going up, or is it effort in terms of its resistance? So it comes back, pulls back, lack of supply, then comes back, and then there's effort again. So is it going to break through? I don't know, but I know one thing: I'm not trading it. I'm only analyzing the range. I'm only analyzing it to see if there's accumulation distribution and waiting for the break. I rely on smart money to pave the way. And that means let them break. Let them break it. We can't break highs and lows, but they can. All right, so there's effort up here. They pull back, they lose supply. Comes back, effort again, and then finally the break. So now it's on breakout. What do? Simple. You buy sell the pullback. So obviously, look at all of this up here. This is all resistance. This is the distribution area, right? Because of this move down. So with the ES, they're going to pull back and they're going to go right into distribution area, and the selling is going to come in. Now, other thing you have to note is how it broke. How it broke matters because it could be a shakeout. So the key here is this. That is on 65,000 contracts, which is the biggest break in 9 bars. In 9 red bars. 9 red bars, that's the biggest break on 65,000 contracts. Which means all of this is distribution. All of this is planning. Up here is planning. Whatever they're doing pre-market, they're planning the move. They're planning. They're distributing and planning the move. And now the move has started. Now, as you know, and the market breaks on this side or that side, there's a very strong tendency to test. And on those tests is where you, me, and the quote-unquote retail trader has an opportunity. We can't break highs and lows, but we can jump on board. So as it comes up, right here is where the pressure increased from 3,000 to 7,000. It tests. As it comes up in that area, the distribution or redistribution starts right there. That 31,000 is smart money stopping the market from moving higher. You can think of it as a climactic, like a buying climax. But that's they're stopping and they're selling that area. So let's see. I mean, I don't know. It doesn't, I guess it doesn't really look so, you can't really tell over here on a candle and wave chart. You just can't tell. Here I can tell, 31,000. Here, I don't know what the hell is going on here. But here at 31,000, and I see these wicks, and then the red bar reversal, and down she goes, right? So, down she goes. Now, here, in a similar vein, is support. Why is this support? Because selling climax, this little brick, this white brick, just like this was buying climax at 31,000. Here's your selling climax of 46,000 contracts. Creates the pullback, a test. There's some effort here to go up. All right, there is some effort to go up, which is on the wave charts, looks like this wave right here, where you have green, 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 green. Then there's a spring of that area to test right on top of the climactic action, and a reversal higher, which is now puts it on a bicycle, right? Okay. All right, so that's the, all right, now let's go to crude. So crude, the higher time frames are on buys, break, 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 right? And you had this opportunity here where you had this sideways action and then a break. It went from 20 to 33 to 28 to 42 to 72 as it goes up. Okay, now it is challenging to find out if this is climactic or not, right? It's not, because it creates the red bar reversal and then you get in. But because the thing is, as soon as, if you're breaking levels and the volume increases, it's legit breakout volume. But it could also be a climax, especially if you're not breaking levels and the volume is very high at a top. Then you're like, why is the volume coming in if it's not breaking levels? It did not absorb the overhead supply. So that probably means there's some preliminary selling or some type of selling or possible climactic action, which should set up at least a pullback, as in this case. So once it sets up the pullback, the market then again takes out this high. As it takes out the high, this always happens, folks. Volume increases. When the volume increases above the high, what happens? Volume, it means the overhead supply has been taken. So the way you interpret this, literally it means they're clearing the way. Smart money is clearing the way, and retail traders need to be smart enough to know how to buy the pullback. Again, this means they're clearing the way. That's why breakouts, especially right ones like this with volume and all that, what they do, or what they were called in Wyckoff's term this somewhere in his course, I remember, where he considered it a continuation trade. All right, so the continuation trade versus the ending action is a little different, but you get the idea. So they continue higher and they break the overhead supply, making opportunity for the pullback. And it's up to us. If that's what you trade, you have to be smart enough to, how do you buy a pullback with good expertise. And there's tons of ways. Again, over here, what do you have? Over here, I don't have a signal. I don't know why. Something, I don't know. But you could tell they have a nice little base, hold, boom, breaking a level on increasing volume, pull back to test, and once again, continuation higher. Okay, that's a wrap, folks. Thank you. Have a good weekend.